this thing is not a toy anymore, and it's not maybe not an asset anymore as well. It's going to be much bigger than that.
Hello there from Bedford. How are you all? Welcome to the What Bitcoin Did podcast, which is brought to you by Kraken, the best place to buy, sell and trade Bitcoin. I'm your host, Peter McCormack, and today I've got Mr. Plan B back on the show to talk to you about his latest and updated version of his S2F model, S2FX. But before that, I do have a message from my amazing sponsors. So first up, we have the future of Bitcoin and financial services. We have BlockFi. And as the market for Bitcoin matures, so do the financial products which support the industry. With BlockFi's interest accounts, you can earn up to 8.6% annually on your crypto. I am a customer. I love getting my Bitcoin interest every month. And with their interest accounts, there is no minimum balance required to earn interest. Also, we have their crypto-backed loans where you can access liquidity without selling. By using your crypto as collateral, you can unlock up to 50% of the value of your assets in USD. If you are interested in checking out BlockFi, please do your own research and then head over to blockfi.com, which is blockfi.com. And next up, we have Kraken, putting the power in your hands to buy, sell, and trade Bitcoin. Now, there has been a lot of growing interest in Bitcoin over the last few weeks. I've even noticed with some of my friends getting on the phone saying, come on, Pete, tell me about this Bitcoin thing. Well, if you're interested, there isn't anywhere better to go than Kraken. At kraken.com, it could not be easier to sign up and buy Bitcoin. They also have a beautiful mobile-first app so you can buy Bitcoin on the go. With their world-class security, they are the most trusted cryptocurrency exchange on the market. And with their 24/7, 365 customer support, they can help you with any issues, whoever you are, wherever you are. There is no better place to trade Bitcoin. Find out more at kraken.com or download the app, which is available for the iPhone and Android. Just search for Kraken Pro, which is KrakenPro. Okay, so on to the show, and today I am catching up with the creator of the stock-to-flow model, Mr. Plan B, one of my favorite people to talk to. Love this guy. Now, if you aren't aware of Plan B, he is 100 trillion USD on Twitter, and last year he released his stock-to-flow model, which was a way of measuring scarcity of an asset and predicted a Bitcoin price of $55,000 1 to 2 years after the halving. Now, obviously a model like that, it's going to get people interested. It's going to get people excited. But the model did have its critics. And this week, Plan B revisited the model. He released his update version, Bitcoin Stock-to-Flow Cross-Asset Model, S2FX, where time is removed, other assets such as gold and silver are added, and most importantly, phase transitions are added. Now, these phase transitions are a consideration for the changing properties of an asset. And with Bitcoin, why its maturing use case leads to higher demand. The outcome of this model is a potential Bitcoin price of $288,000. Is this realistic? Is it crazy talk? I got him on the show to talk about it. Now, Bitcoin supply and issuance plays a major part in this model. And with the halving less than 2 weeks away, I had to get him back on. I had to say, come on, Plan B. You can't just put this price out yet. You can't come out there and tell us Bitcoin might hit $288,000 and not explain it to us. He agreed to come on, he agreed to talk through the model, but we also talk about the reduction in block subsidy, the short and long-term price implications, and the critics of his models. If you haven't checked out the model, please do that first. It's worth taking a look at. And if you've got any questions about this show, you can reach out to me. My email address is hello@whatbitcoindid.com. Hope you are doing okay out there. I know these lockdowns look like they're hopefully going to be coming to an end soon, which is great. If you're a bit bored out there, if you want to check out my new film, it's available on Defiance TV. I go up to the border of Turkey and Greece to look at the migrant and refugee crisis there. Just head over to youtube.com/Defiance TV, or you can check it out on my website, which is defiance.news. Also, I've got a new show up on my Defiance podcast asking where the fuck is Kim Jong-un. He's disappeared off the radar. It's a fascinating interview looking at the Kim dynasty as well. You can check that out. That's with Paul French. All right, any questions, feel free to reach out to me. I do really enjoy all the emails and DMs I receive. Please feel free to get in touch. Mr. Plan B, welcome back to the show. How are you, man?
Very good, Peter, and thanks for having me again.
Oh, you're welcome. You know, you can come on the show at any time. Loved talking to you last time. Very popular show. People liked it. I think it's up there and it's definitely a top 10 show. It might even have crept in as a top 5 show, maybe top 6. But people really enjoyed it, and I think they'll enjoy this one. And I've called this one. I've got actually at the top. I put Stock to Flow Revisited. It's like the revenge, part 2. All right, man, let's
Very
get
good.
into this. Look, you know my show. You know what I'm like. I like to ask the dumb questions. I have, normally I say I'm not very technical. Well, I'm not very experienced in statistical modeling either, funnily enough. So what I'm going to want to do with this, I'm going to want you to talk me through it. I've got your new model in front of me. I've been through it a couple of times. I think I get it, but there's some bits I don't understand. So I'm going to go through and ask the dumb questions, and you can explain to me what's going on. But before we do that, I think just as a primer, if somebody didn't listen to the last show, perhaps they're new to Bitcoin, they've just joined this week, and maybe they discovered my show. Back in March 2019, you released your original stock to flow model. So let's talk about that first. Let's just dive into that. Talk about what the original model was, why you did it.
Yeah. So as an investor, I'm always looking for fundamental models like cash flow models or option pricing models or statistical econometrical models that I work with every day. But for Bitcoin, they weren't there yet, and that's logical because it's a new asset. I was looking for a fundamental model, and when I didn't find it, I started to build one. So I just went with the white paper and all the people that were mentioned there and the sources, and develop a very rough model that has scarcity of Bitcoin as the basis. So I was drawn to Bitcoin, well, from a financial perspective, and the fact that it's very scarce, that there will only be 21 million Bitcoins ever. Yeah, that should be worth something. So I found a way to quantify that actually by reading Saifedean's book, the Bitcoin Standard, and the measure that was mentioned there for scarcity was stock to flow, and it basically measures the amount of years of production of something is available as a reserve above ground. So they use it for gold too. I knew the stock to flow. And when I saw it on Bitcoin in Saifedean's book, I knew, okay, this is a good basis, because I know it from the traditional gold world, and stock to flow is on the amount of Bitcoins that is already there compared to the number of Bitcoins that's mined every year, and that was about 25. It's now about 27 years of production. So that was the basis, and then I correlated that with the price of the last 10 years, and the results were actually quite stunning, and so I decided to publish it in a very short paper that took me by surprise. I have to say I just published it for fun and to see if there is any reactions from other investors or quants, and but it has been quite a ride since March last year.
Yeah, very well received. It's put a bit of pressure on you around this halving, though.
Yeah. We'll see whether it works for one more halving or not. And I should say that it's a model. It's a statistical model. So like all models, it's wrong, but some are useful. So I hope this one is useful. At least for one or two by living through this halving in the next 2 weeks and the year after. I'm so excited about what's coming and if the model holds or not.
Yeah, so let's break down the original model. For somebody who's never looked at stock to flow, and don't explain it with Bitcoin, let's start with gold. Explain what stock to flow is and how it's measured.
Yeah, so stock to flow is a measure for scarcity, if you will, and it's very easy. It measures how much gold there is at the moment. That's 190,000 tons of gold, and it measures how much gold is produced every year. That's about 3,000 tons or 3.2 thousand tons. And if you divide the 190,000 stock by the 3.2 thousand flow production, you get the number 58, around 60, let's say. So there's around 60 years of gold production above ground, and that's the stock to flow. That's the stock to flow number, 60.
And why is that useful, though?
Yeah, You can compare stock to flow of different assets. So, for example, you can compare gold with a stock to flow of 58, with silver that has a stock to flow of 33, and you can compare it with platinum or palladium or other more commodity-like metals, and they'll particularly have a stock to flows of 1, so very low. 1 is an indication of something being a commodity, an industrially used commodity, and not a monetary asset like stock, like gold, with a very high stock to flow. So it's very useful in dividing assets between commodities and monetary assets.
Because a monetary asset is hoarded and held.
Yes. Yeah, and in a way, then I call it scarcity, or that was what I was looking for. But you could also call it a measure that measures holding in how much a good is held by investors or used by industry.
And palladium, that's not held by investors, really.
Exactly, and that's very counterintuitive, by the way, because a lot of commodity investors I speak to, they say, okay, yeah, but there's a lot of gold, and there's far less palladium or platinum. So platinum and palladium are scarcer. But then I say no, because the production is also very high. So in fact, the production is about the same as the stock of platinum and palladium. And what that means is that producers do have a very large power, very much control over the price, as you can see in oil as well, which has a stock to flow of about 0.25, very low. But so producers have a very much control over the price if stock to flow is low, because if the stock to flow goes up, if the price goes up, they just make more, and they push the stock to flow down again. So it takes some really weird event, something historically significant, a war or something that's very improbable, to escape this commodity trap. And Nick Szabo calls it the unforgeable scarciness. So yeah, something has caused it, and once it's there, it's very hard to get. But once it's there, then yeah, you're in a different domain, if you will, the monetary domain.
Right. Okay. So that's a very useful starting point, and this relates to Bitcoin because Bitcoin can't really be a commodity, right?
Exactly, and in fact, I think this is one of the main things that Satoshi Nakamoto invented: the digital scarcity. Because it's very counterintuitive. If something is digital, it can be copied, right? Like a picture or a movie or music. So you don't think about scarcity if something is digital, and still Satoshi managed to make something scarce and digital, and that's really that's really an invention, actually, and it's worth a lot. It doesn't go away anymore. It's very useful.
Did you get any criticism from the original model? I'm trying to remember.
Yeah, actually a lot, and I like that. I mean, it's just the first thing, and if I'm wrong, I want to know, because I use it for investing, so I really want to know if it's wrong. And no, I got some. There were some very positive reactions, of course, like, okay, it's great that you do this and that you try it, and it's a great insight. But there were also it actually activated a lot of fellow investors, quants in normal banks, in traditional banks and pension funds, that tried to replicate it, because I had made all the models and the data available. So they replicated it. It was very fast, actually. The same day it was replicated, and some noticed some statistical oddities in there. I don't want to get too technical, but for the kind of regression analysis I did, there are some statistical things that need to be met, and they weren't there. And then somebody else came along and said, okay, but you can look at it this way, and then it's great again. Actually, this debate has been ongoing for a year now, and it's certainly not finished, because I saw even today we're recording, what is it, 28th of 29th. There's a big debate going on between all the quants right now as we speak, and that's one of the great things about science, right? That everybody talks about it, and there's a lot of disagreement, and I like it a lot. But so far it has not been falsified, so it's still standing. It's there.
Well, it works until it doesn't, and we're all looking at you right now, man. We're all looking at you. We've got this halving coming. But listen, look, until we spoke the other day, I didn't realize you were working on a new model. You said to me, "Look, Pete, I've got this new paper come in. I've got this new version of the model. Why? Why did you come back to it? What was kind of like? What was inspiring you to revisit the model?"
Yeah. Actually, two things. One thing kept nagging me. It kept irritating me from the beginning. If you look at the original paper, and some have noticed it, by the way, you see this model that I made, stock to flow versus price, and the straight line. But you also see the gold dot and the silver dot in the chart. So I plotted gold and silver in there, but they were not part of the model. They were there because I liked it. I knew the stock to flow measure from the gold and the silver world. So I that was one of the charming things of the model, that it's not only a time series model, but there seemed to be some relation with gold and silver as well. So I plotted it in there, and I said, well, it's some kind of benchmark, and it gives me extra confidence. But and later I tried to put it in a formula as well, together with other commodities. So I ended up, and the ones who follow me, they know that, but I ended up with two formulas: one of the Bitcoin time series, and one for the gold, silver, and all the other commodities. And having two formulas for the same thing, that just didn't feel right. So I was always looking for this one formula, and actually it's funny that Raoul Paul from Real Vision.
Yeah, love Raoul.
Yeah, so Raoul was actually very early, and he saw, before I saw it myself, that there is a link with gold. And we had this interview summer last year, where he actually said, yeah, well, your model is useful for gold and silver. It is useful for Bitcoin, but also for gold and silver. And I said, well, it's not part of the model itself. It's not part of the formula. It's a benchmark, but I can't see how they fit together. And we both felt that it should be together, but he recognized it earlier than I, that there was something there. And it's only till, well, actually last Monday that I quantified the relationship and I was able to merge the two formulas into one. So that was a real eureka moment. I was very happy about that, and that was a long held wish to combine two formulas into one and bring gold and silver into the formula, and that makes it a cross asset model. And the other thing is that I wanted to introduce a new way of thinking, another perspective on the same data, because I didn't use other data for this second model, but just looking at it differently, because we have been looking at it as like a time series. So all the quants and me too, we just went into one path of time series, of, well, co-integration is a term you hear a lot. So and added the story about the drunk and the dog, and stock to flow and price keeping very tight to each other, the rubber band, those kind of narrative. That was the perspective we had on Bitcoin, and the time series model brought with it all kinds of statistical difficulties, questions like the co-integration, stationarity, and all that stuff. But that's one way of looking at it. And in fact, the new model, the S2FX, the cross asset model, introduces this way of looking at it with phase transitions. And I spent one paragraph on it in the article to explain it. But the phase transitions, I think, are very important. It means that it's like water. Water can be ice. It can be water that you can drink. It can be liquid. It can also be gas, vapor. So it's all water, but it's totally different properties, different phases, and you have that in finance as well. For example, the dollar. We always talk about the US dollar, but if we look at the last 200 years, the dollar hasn't been the same. We've called it dollar, but it used to be a gold coin, and then it was a paper because that's much easier, and you could and you could always get gold coins. You could go to the bank with a bill, a dollar bill, and you could get your gold. And then in the third phase, it of course it was 1971 when they cut the link with gold. President Nixon did that, and then of course it was total fiat. There was no link with gold anymore. And in all those three phases, we call it dollar, but those are very different dollar assets actually. And we noticed that in Bitcoin too. I reference a study by Nick Carter in 2018. He had investigated the narratives, the Bitcoin narratives over the last 10 years. So Bitcoin started out as from the white paper as a proof of concept, basically, of this system that Satoshi invented, peer-to-peer, e-cash, and proof of work. So it's a proof of concept
kind of a toy.
That paper.
It was kind of a
toy. It was exactly a toy. It was never worth more, the whole Bitcoin market, than $1 million in those first 2 years. And then came the transition. It went from a toy, magical internet money, to dollar parity. So one Bitcoin was worth $1. That was in fact a very big achievement. And it got big traction then because it meant that you could use it for payments, coffee, micropayments, content on websites, and it was the payments phase, if you will. And then it started to grow very, very hard. The price increased very hard after the halving in 2012, the first halving, and the price shot up from $10 to $100 to $1,000 and even $1,100 or $1,200. So it approached the level of gold. One ounce of gold was $12.50, I think, at the time. So there were all those stories, and I remember it well. They were talking about gold parity. So we had the US dollar parity at $1, and now we were talking about gold parity, of it being worth more than 1 ounce of gold, which is it's just a milestone, but still the narrative changed and from payments to e-gold. And nowadays we're one halving further, at a halving of 2016, and we reached two financial milestones. One is the $1 billion transactions per day, which we have. We're far beyond that, and the other one is $100 billion market cap, if you will. That's small if you compare to US dollar, but it's not that small. It's about the size of a big bank in America. It's a large cap in the S&P 500. So it's a financial asset, especially with future markets in Chicago and New York, and legal clarity all around the world getting better. So it transformed it from the proof of concept phase to the payments phase to the e-gold phase, and now in the fourth phase, the financial asset phase, if you will. And so I found that very interesting, that those phase transitions that you see in water, but also in the dollar and also in Bitcoin, was a good lens to look at Bitcoin, and maybe even a better lens than the time series lens and the co-integration lens that we have been looking at it.
Right, because there isn't a specific timeline for these, although these phases do seem to follow the halvings, right?
Yeah, it's a bit of both. So you could say that I integrated the time series model into the cross asset model, where I converted. We'll talk about that later, but where I converted the time series into the phases that we just talked about, and then added gold and silver, and then see them all as different assets. So it's sort of a mix of the two.
Because one thing I would throw in there is, like, if you look at the change of the dollar, it seems like the phase transitions for the dollar is more about how the US government wishes to be able to manage and manipulate the dollar, really. Whereas if you look at the phase transitions of Bitcoin, it's almost like Bitcoin's growing up. It doesn't even, the proof of concept's done great, then payments. But even when it becomes e-gold or a financial asset, it still can be used for payments. But it's what you consider it can do is so much more.
Yes, yeah, no, I agree. It's with Bitcoin, it's more like a maturing aspect in there, and of course the fifth phase is very interesting. So what will be the next transformation? How would that look like? And
have you thought about that?
Yeah, I did. Yeah, I did, but I'm not going to speculate. I think it's there's people that can do that more far better than I. What I hope is that where the first paper with the time series activated a lot of quants and actually brought in some banks and institutional parties as well. I hope this way of looking at it brings in some strategic planners, some geopolitical thinking, maybe some military thinking even. And for example, also the narrative study that Nick did, Nick Carter, it stopped in 2018. It would be very interesting to see an update of that. And we could sort of project what's happening in the world right now. And lots of is happening, of course. We're at a very strange time where there's strange things with, the virus, oil, the money printing. It feels like a phase transition could happen, right? And we need some military, strategic, geopolitical thinking to help us guide there and put some markers on the way, put some scenarios there that we can talk about. It's a call upon thinkers in that area to join the journey and. Think about the fifth cluster and
state
phase.
Adoption.
Yes. Because and of course I'm an investor point of view. That's also interesting because the dollar example you mentioned, it's politics that does all the changing. But if you look at it from an investing point of view, it's a time series, right? If you look at 100 years of data, it's always expressed in dollars. And but you have to recognize that those are not the same dollars before and after 1971, and before that, there's also a breakpoint like that. So every time you work with time series, you have to make sure there's not some break in there that should give some consideration.
What do the phase transitions do for you by understanding them? How does that affect the model? Does it allow you to rationalize the increase in value?
No, well, that's certainly not a goal. No, what it does actually is remove the time. It removes the time element. So where the time series is in my case, a monthly series with stock to flow values and Bitcoin prices, and that's I thought it was 111 data points I had, 111 months. But what we actually do here in the new model is clustering those data points. So we look at a stock to flow on the x-axis and market value on the y-axis, and then if there's a picture in the article as well. If you look at it, just without any statistics, just look at it. You see dots. You see data blobs.
I'm looking at the blue dots here.
Yeah, the blue dots, and you can recognize the clusters and the phases. Those are the phases, if you will, and you could treat it as a time series. That's fine if you bring the time to the x-axis. But I think we're dealing with a different thing here, or. Well, I like the quote that I used in the article as well. It's from Bragg. That's a guy, it's an Australian guy who got the Nobel Prize for X-rays, and he said it's all about the way of thinking about things, and not about how much data you have. So, in fact, this is the same data. The blue dots data. It's the same data as the first model. But if you just look at it, you can think about it in time series. That's what we did first, or clusters or phases, if you will. And yeah, I must say, I like the phase view right now. So from there, I started to quantify it. So, well, let's just do it. And make a cluster analysis. And that's the next picture in the article. It shows the clusters on top of the data blobs. And those are, think about the clusters as the centers of those blobs. Like you have a blob of data with maybe 100 data points. No, it's less. It's 40 data points. And then there's a center in there, a centroid. And that's what the cluster is. And then you do that for every phase.
This is where I need some help. Okay, so I'm looking at the chart. Explain me how does a blue dot come to appear on the chart? Just one on its own. How does it come to appear there?
Yeah, let's look at current phase, the fourth phase. So it's a data blob that spawns from in this case the last halving in July 2016 till today. And you see all those stock to flow values on the x-axis and market values of Bitcoin on the y-axis. Mm-hmm. And then you take the exact middle of that data blob, and in mathematical terms, that's you minimize the distance. You choose a point so that it minimizes the distance, the total distance of all the points together. So you're looking really for the center. And I must say there's a lot of ways of doing that, of measuring that. So you could have sort of the average distance, but I'm specifically looking here at the median distance. So the most frequent stock to flow and the most frequent market value in this dot, in this data blob. And that's what the algorithm searches for. Where is the cluster the most dense? Where are the most dots situated? And that's the point that it chooses. And it does that for all the four data blobs.
What are the data points though? Sorry. Yeah,
the data points are monthly numbers of stock to flow and Bitcoin market value. So, for example, today is 26 stock to flow and 14 or something $billion market cap of Bitcoin. And last month it was slightly different, and you do that for every month last 10 years. So what in fact you do, you compress all the data, all the 100 plus data points, months, into 4 clusters. And that's what you use as an input for the model then. Not the 100 plus data points, but the clusters of those data points.
And so you analyze those clusters. Did you notice the clusters before you started looking at Nick's work? Did you just do this outside of looking at the narratives around Bitcoin?
No, I learned about Nick's work later, but I did notice in the data there were blobs. There were, of course, I saw the halving effect, so I noticed the jumps around the halvings. But I also noticed, and I think everybody has felt it who was in Bitcoin the last couple of years with the 2017 peak, and then the crash to 3,000, and then now we're up again. But on average, if you look at the chart also, on average, the last 3-4 years was around, somewhere between 6 and 7. It's very strange that it can keep at one price level in such a long period. And the same happened in the phase before this, and the phase before that, and the phase before that. So I noticed it, but I never quantified it. I just used all the data and thought, well, the more data, the better. And usually that is the case. In this case, I don't know. There's a lot of people who use daily data or weekly data, so much more data points than I use with monthly data. But all it does is make the data blobs thicker, denser. It doesn't really move the cluster. So I was thinking, the more data you use, the more noise you add. If it doesn't move the the cluster, the middle of the data blob, then the real signal is that cluster. So let's use that.
And themselves, the clusters, are they getting more defined? Is the data becoming more accurate? Is it more accurate as we move through these transitions from one phase to another?
I don't know, actually. You could measure that, maybe how much data points are in the circle around the cluster middle. I haven't done that yet. I would say from just looking at it, maybe it becomes, it could become a little bit denser, but I don't know. There's no guarantee that stays, or that it will be a trend in the future.
And if there isn't a fifth phase that happens within the next 3-4 years, say it just stays as a financial asset, but the value goes up as the stock to flow reduces, does that affect the model at all? Does it need a fifth phase?
Yeah, it actually needs a fifth phase, because the stock to flow, we know that the stock to flow will double from current 25 or 26, 27 to around 56. So we know that there will be a blue dot to the right, and if it stays at the same market cap level, then it's out of the bands of the model. But it did this 3 times before, and then it shot right up to the model value. So that is the big question, actually. So we know the stock to flow is going to double. The blue dot will go to the right. The question is, will it also go up and a fifth time, and in line with silver and gold, more in line with silver and gold? That is the big hypothesis that's behind this.
Yeah. But what I'm saying is, can it? So the blue dot can go to the right as we get to say 56, and the market cap can go up, but that can happen with it still just being a financial asset, right? It doesn't need a new defined narrative.
Oh, that's what you mean. Well, yeah. I think it does, because if the next blob is indeed around stock to flow 56, and it follows the model market value, then the market value goes to 5.5 trillion. That's between silver and gold, but that's like what is it, 50 times more than it is right now. And mind you, that's a lot, but it did that every time it made a phase transition like this. So let's say a $5 trillion Bitcoin is a totally different beast than a 100 billion current Bitcoin, because $5 trillion US dollars, that's more than the monetary base of the US dollar.
So it needs more people in the market, more buyers and sellers. It needs more market activity. So what are they coming in for? Because if you go back through your narratives, right, I call it like a toy, but the proof of concept was, a bunch of people who have interest having a play with it. And then there was that expanded, and people started to pay for and buy some things with it. And then the digital gold narrative came in, so people started investing, and then opening up to the financial markets with futures and CME and backed. That kind of, all of these narratives create a wider market, a wider pool of people who are interested. So I guess what you're saying is, if the fifth narrative, you're not going to say what it is, but I guess if I said, okay, maybe a nation state will start using Bitcoin, or perhaps some of them will start settling in Bitcoin, that is something that can increase the confidence, increase the number of people who are interested in Bitcoin, and therefore takes it into that new phase.
Absolutely, yeah, and it's needed. It's not some continuous growth towards that point. You don't go from 100 billion to 5 trillion. Those are totally different leagues, totally different worlds. So yeah, it could be a nation state. It could be a nation deciding they want to get paid for their oil in Bitcoin, or some central bank that decides, okay, maybe it is wise to put some very small amount, whatever amount, but in Bitcoin, because it's Bitcoin is already bigger than most currencies in the world. I think it's bigger than about 100 countries.
It could be Russia. I mean, did you hear Putin talking about cryptocurrencies?
I did. Yeah. Well, I think it would be, but it would be so extremely smart of Russia to do that, and because you don't need much money, and we're are printing anyway. So if you're printing trillions, or maybe Russia less, but if you're printing a lot of money, why not? Why not a little bit? It's the asymmetric returns of something going 50x that that it doesn't hurt that much. But if you're right, you're really a winner as a country. So yeah, I think that makes sense. But there could be other narratives. There could be, well, it's a financial asset now, but there's no institutional investor like my employer who's going to touch it now. It's too small. It's too new, and there's not much fundamental models. Yeah, mine is the only one out there. So yeah, what are you going to do? But if it now works, if it seems to follow the stock to flow, and if it seems to go into the next phase, makes another jump in price, then it might become a institutional grade asset, and that is something what it isn't now. It is not an institutional grade asset, Bitcoin, because it's a toy for rich boys, for billionaires and early innovators that were there early, and some hedge funds that are outside the scope of regulation. But there's no bank, no pension fund that even dares to touch it. So before we talk about nation states and global reserve currency, I think there are some states in between.
Next up, I talked to Plan B more about S2FX and the upcoming halving, but before that, I've got a message from my amazing sponsors, and I got a new sponsor this month, so a massive thanks and a massive shout out to Least Authority. This is for you techies out there, the builders, those who are creating the applications. Least Authority is a security consulting company pushing the limits on how to build privacy-respecting solutions. They specialize in security audits, design specification reviews, and security by design, while also making regular contributions to the open source and decentralized space. They can help you improve the security of your wallet application, key management solution, layer 2 protocol, P2P network design, use of cryptography, and so much more. If you want to boost your security strategy, you can arrange a no-obligation call to find out how Least Authority can help your next project. Just head over to their website and hit the Schedule a Call button. That's leastauthority.com, which is leastauthority.com. Also, have you checked out sportsbet.io yet? The best place for online gaming. And also, what is very cool about them is that they accept Bitcoin. Now, I cannot wait for the football season to get going again. I want to wager some Bitcoin on Tottenham losing every week. Absolute no-brainer for me. But with sports currently on a break due to coronavirus, there has been a massive growth in esports, and sportsbet.io now have 11 markets, including eFIFA, eNBA, and eNHL. Not only this, but sportsbet.io also has their Bitcoin casino and my favorite, the poker rooms. If you want to find out more, head over to sportsbet.io, which is sportsbet.io, and they also have a whole bunch of promotions available at sportsbet.io/promotions. And lastly, this week, I do want to welcome Scott Offord back to the show. You know, with the Bitcoin halving, it's going to have a massive impact on mining profitability. And Scott from Crypto Mining Tools has a solution for Bitcoin mining equipment owners looking to get a little more out of the life of their miners. I've told you about Scott's Bitcoin mining calculator in the past, or Scott has recently launched a Bitcoin miner hosting directory. If you want to move your Bitcoin miners to a more cost-effective location due to the halving, go to cryptomining.tools to research hosting options available in your country and around the world. Scott is also looking to add more hosting and co-location providers to his hosting directory. So if you own a mining farm and have extra space you want to get filled, reach out to Scott's hosting partnership arrangement guy, Shannon Squires. He is on Telegram. He can be reached on the username @Squires, which is at SQUIRES, or you just use the contact form found at cryptomining.tools. In some ways, does the new model give you a get out that the previous model didn't give you? So for example, the previous model, if we'd gone through the halving, perhaps even 6 months after, a year after, we hadn't seen that increase in price. People have been questioning whether the model itself is broken, but actually it needed this extra kind of dimension of data to rationalize why there was, because look, we're talking about supply and demand here, right? And each phase creates, as we said earlier, like a new pool of potential buyers, right? And also sellers, but with if we'd have gone through the halving and there hadn't been a change, people would say the model is broken, but the model wasn't rationalizing why there was this increased pressure.
Right. And this new model doesn't either. So it doesn't really give much more than the stock to flow increase as a reason for the market value increase. But what it does do is give another perspective, another way of looking at it, and and I like that way of looking at it, because it's the jump in phases, that is something that is easy to imagine. And I think, well, at least in my opinion, and especially right now with everything going on, from money printing and virus and oil and et cetera, et cetera. So it's, I think it's the same thing, really, right? It doesn't, the model doesn't use other data, but the way we look at it through this phase transition lens is creating a new way of thinking. At least it does it with me, I notice.
You know what, we might break through 9K during this interview. We're up to 8877, which will be interesting. Okay, let me ask you something else. What's quite interesting about this is also, it's not like there's a specific point in time which this is pinned to for this this kind of next phase in Bitcoin's life. We've essentially, there's no limit to the time, but essentially we're talking about over the next 4 years, right? Does something happen over the next 4 years? And the model allows you to have those outlier dots. So potentially something doesn't happen within the first 6 months of the halving, but potentially there's a small change, right? So the model allows a time for Bitcoin to evolve into this next phase, yeah?
Absolutely, yeah. You see that in the last blobs as well, the last phases. That especially after the halving, nothing happens, or maybe it goes up a little bit, and then next month it goes up a little bit. It can take a year before the new cluster is actually there. Actually, I think it will also overshoot, like the last times, right? There will be FOMO. Imagine what happens if, well, you said we go through 8,900 maybe this interview, but imagine what happens when we go through 15K in the next couple of weeks or months. That will create some enormous FOMO. People who fear to be missing out, and that could trigger something as well. So it will. That's this. Well, the scary thing in one way, but the logical thing as well. It will overshoot the cluster, the next phase, and it will go down again as well. So we will see exactly the same thing as we saw in 2017 and 18, and the years before that. It will go up far beyond the numbers we just talked about. So the model allows for a lot of variance around the dots as well.
Okay, and as I go down the post itself, I actually get to the version where you've included silver and gold in there, which is very, very interesting. That it is almost a perfect line through the center of all 6 circles. I think, if anything, the last cluster just slightly misses out, but it's close enough, right? What happens to the model, say, if something doesn't happen over the next 4 years? Does it break the model? Is the model dead, or is, what happens?
Yeah, well, like you said, and like the last model, the first stock to flow model, the time series model. If it can break, so yeah, if the blue dot stays where it goes to the right, stock to flow doubles, but market value doesn't, then the model would break somewhere in the next 4 years, and maybe earlier than that. Because if half of the points is below the model line, then yeah, it becomes very hard to get the average on the model line back on the model line. So yeah, we will know. I always give the December 2021 as a nice sort of 1.5 year from the halving mark. We will know by then if this hypothesis is okay, and we really have out of sample tested the model then.
Yeah, and I saw a thread from Dilution Proof where he said, I think it's important to emphasize that these models should not be used as absolute price targets. But this is, I guess these models are used for some way for people like you as investors to get some kind of understand of the market so you can kind of invest with confidence. And you accept that models may break, right?
Yes, yeah. That's a very good point from was it dilution? No, well,
Dilution proof.
Yes, that was a very nice thread, by the way, and where he summed up the whole history of the stock-to-flow model. There's a very famous quote about models. It says models are always wrong. All models are wrong, but some are useful, and that's very true. If you look at weather models, they're always wrong, but also very useful, and especially for 1 or 2 or 3 days out. But and that's what I don't like about a lot of comments about the model, but how the stock to flow goes to infinity, and does the value also go to infinity? That's 100 years out, right? That's over. You don't expect the weather models to forecast the weather next month or next year. I would be very happy if it would only forecast the next halving or maybe 2 halvings. Correct. That would be very useful right now. And you're very right as well about it's not very precise, the models, and that's another famous quote. I'd rather be roughly right than exactly wrong, and that's why I always talk about orders of magnitude right with this model. It's not about the exact dollar value of the Bitcoin, or and that's also what I like about the phases now. They are very rough targets, and the actual Bitcoin will be above, below, scattered around that target, and that's how we should look at it. Not very precise. It's a model, and it gives us models are. You can get married with the model and believe in it and put all your belief and money in there, and that's so stupid. You should use a model as a way of thinking, as a way of structuring your thinking about something, and maybe get some rough direction from it. And I think that's what we're having here with this S2FX model. It gives a very even rougher estimate than the earlier model, but I think it's more useful because it forces you to think in phases, in big steps, from, in this case, $100 billion Bitcoin to a multiple $1 trillion, $5 trillion Bitcoin market value. That's a huge leap, and it's not going to be a gradual thing. That something is going to change in the next couple of years, or not, and then all bets are off. But let's look with some strategic thinking and military experience and geopolitical theories about how this could happen, and what are the markers, what do we have to look for. And it's in that way the whole community is evolving as well, from developers to early speculators to hedge fund investors to now the first quants of institutional investors, banks and pension funds are there. But we need political thinkers as well, and military thinkers. This thing is not a toy anymore, and it's not maybe not an asset anymore as well. It's going to be much bigger than that, in my view.
Yeah, I find it interesting. So I looked at the S2F model previously and obviously got excited about it. But at the same time, Mr. Plan B, I did look at it and think, well, this is just making some assumptions that the drop in production, the drop in the Bitcoin subsidy every day would suddenly lead to less Bitcoins being in the market and then the price going up. I didn't buy that entirely on its own. It just didn't. I did have a feeling like I wonder if through the next halving would break, because we are talking about psychological barriers also of buying a quite high-priced single coin asset, right? One of the things, I do think the price of Bitcoin pisses people off. I know it does, actually, because friends ask me about like how much is it, and when you say like, oh, it's $8,000, they're put off. Whereas if everything was priced in sats, they wouldn't be, right? If it was, oh yeah, you can get, I don't know, whatever, any amount of sats for $10. I think it's less of a psychological barrier, but the narrative part makes it a bit more interesting, because actually what we're really talking about here is use cases. We're talking about people in the market, and then because of that, because there is we're talking also about a scarce asset, that is what is leading to the growth in price. And that is, I think it's a much more mature way of looking at the model.
Yes, I totally agree. And the model itself doesn't give the answer. It doesn't give why. It doesn't give, well, it's a much heard critique that it doesn't model explicitly the demand. It just gives a rough indication of where it has to be based on supply. But yeah, the narrative and the why is we don't know why the halving is important, because you could argue the number of coins will halve. The supply will go from 1,800 bitcoins to 900 after the halving, but that's still very little compared to the million plus bitcoins that is traded every day. It's less than 0.1% of the Bitcoin. So how can that be that has an impact on it? On the other hand, if you think in narratives about the halving, if you look at what's happening in the industry, in the market, it's not hard to see why it has an impact. Before the halving, maybe not now, but a couple months back, there were weak miners with old equipment and very high-priced electricity mining with their equipment. That will be obsolete. So all the weak miners, they will die. They will stop mining because it costs more than than the revenue. So the weak miners go. Same with the investors. The weak hands are shaken out by the volatility in the market. So only if you have a really strong belief, you're in there. And that's, I know what's worth more, a market with weak miners and weak holders, weak hand investors, or a market with very strong miners, professional grade, latest equipment, low energy costs, and really strong hands, strong visioned investors. That's the perfect setup for growth, for a transition to the next phase. If you ask me, it's the narrative for me is, even if you don't know exactly what it is, it's very simple.
Have you mapped any other data onto this, such as number of wallets, volume traded? Have you mapped that into this at all?
Yeah, well, yeah, I do have the data. So I have a full node running and a fairly large computer that has the whole 300 gigs database with all the transactions in there available for crunching data. So I can see who sells, who buys, or at least what kind of wallets, old wallets, new wallets, etc. I can see the patterns that are in there, number of bitcoins, a number of miner coins. So everything that's on the blockchain, you can model that and can look into that. But I haven't published that yet, and I might be in the future. But it's mainly a huge open field for hunting. It's not much work is done there. There's some companies, of course, that are doing it, and also some very good research reports out there on Twitter, etc. But yeah, I've been looking at that, and it's a quant heaven. That much data, that much patterns that not much people have looked at. So yeah, I'm that will be one of the future things for me to model.
Okay. Well, listen, look, at risk of hyping people too much, you have come out with a target potential valuation of $288,000 per Bitcoin. Is there a range around this? Like, what is the range we're talking about, though?
Yeah, I haven't even looked at that. Okay. It's that fresh. But yeah, just looking at the chart in the article, you can eyeball it by saying it will be at least the all-time high will be at least a factor 2 higher, and the low will be at least a factor 2 or 3 lower than that. So yeah, it dances around the dot quite with quite some volatility. I haven't really put a 95% or something bandwidth around it, but it's very easy to do, and that will be done in the next couple of days or weeks.
Well, if it does, I'm going to force you to at least dox to me so I can come have a beer with you, because I'd be very happy with a 288,000 Bitcoin. I mean, God, like some people said, you only need one Bitcoin and you're set for life.
Absolutely. Well, let's do that with the beer because actually I am anonymous, but I meet a lot of people, or I should meet. I should say I met a lot of people because traveling now is of course not possible. But when we go traveling again, Peter, let's have that beer in Bedford or Amsterdam or where we are.
I think Amsterdam over Bedford. I mean, I love Bedford, but all right, listen, look, last couple of questions before we close out. Again, appreciate your time. And I feel like you've kind of given me an exclusive on this interview, which is pretty cool. Has this model have you received any criticism? I did notice on the Medium article, very positive, but there was one person who was a little bit critical of the model. Have you received much criticism of it?
Well, it was mainly very positive, but that, of course, is always the case if you predict higher Bitcoin prices. And there were also some critical things like there's only 6 data points, which is not much. Maybe it's not it's too few even. So, and I pointed those out as well myself in the article. But yeah, people picked that up, and so the few data points was one. And the other one, there was another one. Oh, it has been wild lately with the response on the article. So I haven't even looked at half of all the comments, I think. So, but I'm sure there will be a lot of criticism, and I hope it will be there from the quant world, but also from the investment world. So yeah, I'm really looking forward to the debate.
All right, man. Well, listen, appreciate your time. As a closeout, what's coming up for you? Anything else you're working on? And just let people know, for those weirdos who don't know you, because everyone pretty much knows you now, but for the weirdos who don't, how do they find you, man?
Thank you. Yeah, they can find me on Twitter. I'm Plan B at 100 trillion US dollars. That's 100 trillion USD. And all my work is there, all the tweets. Yeah, one of the obvious things that's going to happen in the next couple of weeks is the halving. So I'll be at some of the halving parties because it's a big celebration. Of course, nothing will happen with the prize, but it will be a big celebration. So I'll join. I'll hop into some of them, and I'm very much looking forward to all the interviews, the podcasts, and that this article has already triggered right now. And yes, Peter, you were the first, and you planned this very well because we didn't know about the article and the interview was already there. It's very lucky, and I'm very lucky to be able to have the opportunity to talk about it this early after publication. So thank you very much.
No, anytime, man. Look, you're always welcome on the show. Love talking to you. And listen, good luck, great article, and hopefully I'll speak to you soon, man. Take care, Mr. Plan B, and thank you for coming on the show.
Thank you.
Okay, so what did you think of that? $288,000 Bitcoin by 2024. Is this realistic? Is it crazy talk? What do you think? Do let me know. Now, while I like the S2F model, I did always have this lingering question in the back of my mind. Where was the demand going to come from for this increase in price? I struggled just to think, well, just because the model exists, just because there is the drop in the subsidy that will ultimately lead to a high price. I don't know. Maybe it's easier to jump from like $100 to $1,000, but from 20,000 to 50, it's a massive leap. I wasn't 100% convinced that reduction in supply was enough. So with this new model, the phase transitions really added weight to the model for me. But what is the next transition? Are we heading to a nation state adoption? Will Bitcoin become the settlement layer for oil markets? Who knows? Who knows? Maybe something will happen. Maybe this model will play out. So we will see. We will see if a 288k Bitcoin is realistic by 2024, if it's just crazy talk. Anyway, I do love having Plan B on. It's always a great conversation, so big thanks to him. We did record last year. If you haven't checked that one out, please go back. It's episode 154, and if you've got any questions, if you want to reach out to me, it's hello@whatbitcoindid.com. Got so many more shows coming up. Got some really cool stuff coming out on Defiance. Got some mini documentaries I've been working on, so keep an eye out for that. If you want to check out my film, my latest one, up at the Turkey-Greece border, looking at the migrant and refugee crisis there, head over to youtube.com/Defiance TV or check out my website, defiance.news. And also, I've got this interesting interview with Paul French asking where the fuck Kim Jong-un is. That's available at defiance.news as well. Any questions, do reach out to me. My email address is hello@whatbitcoindid.com.